But this time around, let's start the day by taking a look at global stocks, which surged to new highs here. This is investors remain optimistic that there will be more aid to actually bolster economic growth and an expanded federal effort to actually get more Americans vaccinated against COVID-19. That's under the new leadership of Joe Biden. Looking at U.S. equities futures here across the board, the NASDAQ, the S&P 500, and the Dow Jones all rising, as you can see right here. The S&P 500 futures, in fact, climbing after the gauge tallied its best first-day reaction to a presidential inauguration, get this, since 1937. That optimism, in fact, is spilling over to the rest of Asia, though regional gauges have already been on a tear for the third straight day now. Chinese stocks here outperforming. If you try to take a look at Shanghai here, it's up over 8%. The Shenzhen likewise, in fact, exceeding the gains here posted by Shanghai. It is up by 1.5%. This after their three biggest telcos have requested a review of the New York Stock Exchange's decision to actually delist their shares elsewhere. Almost all indices on the upside here for the region. Japanese stocks here, the Topix is up 0.6%. The Nikkei likewise also ending the day in a positive territory here, edging higher by 0.8%. The Hang Seng, however, somehow sliding into the negative territory here, down 0.4%. But the Kospi, as you can see here as well, is up by 1.5%. But guess which index bucks the trend once again? No surprises here. The PSEI in the red. Not the most exciting day here for the local bourse. Local shares ending the day flat, but still on the downside, capping off Thursday at 7,140.29. The PSEI has been in the red for the past 5 days, already tumbling by as much as 1.8%. But there are exciting news here when it comes to some specific stocks here. Let's begin with Philinvest Land. The stock rising by as much as 2.7% to 1 pesos and 15 centavos a piece. It even peaked as much as 3.6% earlier today. The rally propelled by the property developer's confirmation that its board has given the go signal for the transition of its fully owned unit, Cyberzone Properties, into a real estate investment trust company. The listing says, according to President and CEO Josephine Gutianon Giap, will actually unlock the value of their office leasing business. Their portfolio is expected to include building leased out to traditional and multinational business process outsourcing companies, some of which are situated at the Northgate Cyberzone in Philinvest Alabang and Philinvest Cyberzone in Cebu. Again, Philinvest Land here ending the day up by as much as 2.7% to 1 pesos and 15 centavos a piece. Now from the property space to one energy player here. Let's go to AC Energy. The stock has been enjoying gains the past 4 days, bucking the sell-off in the index. Today, shares rose over 4% to 6 pesos and 97 centavos a piece. This time, optimism pushed by reports that the power player has been chosen as among 6 renewable energy suppliers allowed to sell under the government's Green Energy Option Program, meaning they would get a lead to actually retail to customers who seek cleaner energy sources. Now, Rachel Cruz of AP Securities says this will positively impact AC Energy and Aboitiz Power, as this will help boost their cash flow. Now, AP also enjoying gains up close to 8% to 26 pesos a share. And lastly, we just have to report this. You have ASAP Natin To, as well as FPJ The King. Both programs of ABS-CBN will now be aired simultaneously on TV5. That begins this Saturday, January 24. This is a collaboration among Signal, TV5, Bright Light Productions, and ABS-CBN. Now, Signal and TV5 CEO Robert Galang says this marks a greater cooperation among industry players and begins a new era of partnership. Now, the new viewing experience, coupled with Signal and TV5's distribution technology and reach, will help usher in a new viewing experience, says Galang. But despite that, ABS-CBN shares not seeing a boost today. It is down 0.3% to 14 pesos and 14 pesos a piece. Now, here are other stories from the corporate front. Now, in connection to ABS-CBN, Lopez Holdings may no longer delist from the Philippine Stock Exchange. This comes after Lopez Holdings' operating arm, First Philippine Holding Corporations or FPH, announced that it is reducing the number of shares it would acquire from its parent company. This brings FPH's tender offer down to a target of 34.5% of Lopez Holdings' issued and outstanding common shares, from the earlier intention to actually acquire up to 45%. Now, this move removes the risk of Lopez Holdings falling below the required minimum public ownership, which in turn allows the company not to pursue its earlier plan of voluntary delisting. The shares will be acquired from all shareholders of Lopez Group except shares owned by parent firm Lopez Incorporated, which has agreed not to tender its common shares. Lopez Holdings down by over 0.25% here, now at 3 pesos and 69 centavos a piece. Now, the Energy Department has cleared 6 firms, including the energy arms of the Aboitiz and Ayala groups, to participate in the country's Green Energy Option Program. The Bacman Geothermal, First Gen Energy Solutions, Aboitiz Power Magat, and Power Res Incorporated, AC Energy, and Spark Solar Powered Agri-Rural Communities Corporation have been given the go signal to offer renewable energy to consumers. The government program, launched in 2018, allows consumers with at least 100 kilowatts of usage to source their supply from a retail energy supplier. Before joining the program, suppliers must secure an operating permit from the DOE's Renewable Energy Management Bureau. The Bureau says they will not be limiting permits to the 6 suppliers. The program seeks to allow more end users to be able to have access to clean power from qualified renewable energy suppliers. Now, Nissan is shutting down its assembly operations in the Philippines. That's according to a report by Bloomberg, quoting Trade Secretary Mon Lopez. The Japanese car maker says this is part of their plan to optimize production and boost operations efficiency in the region. Lopez said Nissan's announcement is regrettable and brings to light the critical situation of the automobile industry, with the pandemic affecting consumers' usual big-ticket purchases. Lopez notes provisional safeguard measures will be necessary to protect the sector. Now, here are other headlines we're keeping our eyes on. State-run Power Sector Assets and Liabilities Management Corporation, or PSOM, has cut its financial dues in 2020 by over 40 billion pesos. This is on the back of improved collection efforts despite the pandemic. Philippine Star reports that PSOM's total obligation is now down to 382 billion pesos from 422 billion pesos at the start of 2020. Last year, the state-run firm disposed 10 real estate assets, raising over 50 million pesos in revenues. For additional income, the company entered into short-term lease agreements with government offices over certain assets that are not yet scheduled for privatization. This brought nearly 30 million pesos in additional revenues. PSOM said it was able to achieve a collection efficiency rate of almost 94%, exceeding target. It was also able to collect more than 2 billion pesos from overdue and delinquent accounts of power customers. The World Economic Forum warns that the impact of the coronavirus pandemic may cause more crises in the coming years. WEF's annual survey of global risks lists infectious disease and livelihood crisis as the top dangers over the next 2 years. Indirect economic effects of the pandemic, like asset bubbles and price instability, meanwhile, top the list of concerns over the next 3 to 5 years. The WEF noted that the pandemic exposed the catastrophic effects of ignoring long-term risks like infectious diseases. They added that world leaders now need to better prepare for whatever the next major crisis is. Like in previous years, extreme weather is seen as the most likely risk just ahead of a failure in climate action. If there's any good that came out of 2020, it has to be the acceleration of IT services. This as many sectors were forced to transition to from home setups. But will that carry over to 2021? To talk about his outlook for the industry, we have Rimini Street's Regional General Manager for Southeast Asia and Greater China, Andrew So. Good afternoon, Andrew. You join us straight from Singapore. So let's kick things off, Andrew. Rimini, as we do know, is in the business of third-party software service support. Based on what you saw in 2020, how have businesses transitioned to being strategic when it comes to their IT operations?
Yeah, good afternoon, Jes. Great to be here. Speaking from you right from Singapore. I think in 2020, things have changed drastically because of the COVID-19 situation. A lot of companies are looking to enhance their all the IT services to become more efficient. They no longer want to spend lots of their investment just to maintain, the ongoing IT spend. They want to spend money on where it touches the customer, right? So a lot of companies that we see in the market space are actually transforming from internal to outward looking to service their customers. Jess?
Okay, Andrew, at the same time, much of the acceleration that we saw in 2020 is really pandemic induced, but the narrative somehow is already changing. You have vaccines already being rolled out, but just the same threats remain, like the new variant. So, question is, do you see the trend in 2020 when it comes to IT continuing to this year?
Yeah, we kind of like work with we work with a lot of customers across the region, especially in Philippines, and all the companies are actually getting ready, right, for the vaccine to be given to all their employees and also the citizens. A lot of companies are actually turning their business to digital, right? No longer is face to face because of all the restriction. So a lot of companies are going digital, going electronics, right? People are actually buying things from the internet. So that actually transformed the way how companies have been spending their investment. As I said previously, no longer their focus is on efficiency within the company itself, but they are willing to basically invest into IT system that are customer facing that could help them to make more money to realize their investment.
Okay, given that, what do you think will be the major holdup for Philippine firms when it comes to their IT roadmaps? Will connectivity still be an issue in the Philippines, or are you seeing major strides in this front?
I think in Philippines there's a lot of improvement, right? A lot of people are working from home previously, and when we first started that work from home arrangement, we could see that the network was slow, but a lot of improvement have been made, and now the most of the employees in Philippines are actually working from home, and through the interaction that I had with a lot of my customer and prospects, the data link is actually getting better, right? We are able to have video conference, we are able to have voice conferences, right? So this pandemic actually have helped the Philippines itself to be more IT savvy, to be more IT enabled, like a lot of Asian countries. So that's something very positive we see from this pandemic.
Okay, question now is, what's the value in tapping third-party software support, and is this something that's been pretty much prevalent, at least in the Philippine setting?
Yeah, I mean, a lot of companies have been investing a lot into the ERP system. So the ERP system actually would make sure that the company is able to generate invoice, able to pay their suppliers, and so on. So that whole ERP system needs a lot of investment in terms of a yearly investment. So due to this pandemic, all the CIOs across the world is thinking, how could I better use the funds that I have? So they one of the option basically is to turn to third party maintenance provider who is able to provide customers, right, with better service and value for money service here.
Okay, at least something that's been at least a trend that has been seen in 2020 is that you have enterprises at least tapping third-party service providers. Thank you very much for your time this afternoon. You have Andrew So, Regional General Manager for Southeast Asia and Greater China of Rimini Street. Thank you, Andrew.
Pleasure.
And those are the biggest news this trading day, January 21, 2021. Catch Business World Live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News.